for review, I would suggest that if you do know there's any days that you're going to be gone, like maybe you're going to be out the month of July, or that you always take off 2 weeks at Christmas. If you do know that you're going to be gone, I would reach out to your program specialist and send them an email, because they really don't want to come out when you're not there. But we don't know you're not there unless when we show up. So if you do know ahead of time that you will be gone, just let us know, because we really do like you to be there when we are conducting a review. That's not our goal to come out when you're not there. But if we don't know that you're not there and we show up, then we do have to do the review at that point. It is a reminder to make all your CACFP records readily available. So if someone else does need to know where the records are. So again, if we do show up and you happen to not be there, then they know where they're at, so we can go ahead and start with the review. Now, we have something, and this all becomes from the new payment system that we're going to, or that we have gone to, is you have to be in good standing with the state. So what you can do is you can check your status online. The information is in the manual of the address that you can go to. And if you're okay in there, if you're in good standing, we don't need anything. We will check this information in our office every year. So it's something that you don't have to send in to us, but we just want to let you know so you can go and just make sure that you are in good standing. You can send us your filing number or take a screenshot if you would like, but again, we're going to go and double check all this information. Now, if you're a school, a public institution, a tribe, or military, this requirement is not for you. It is, again, only for those other like for-profit and stuff like that. Now, if you are a sole proprietor, you may not necessarily be in good standing with the state, or you don't have to report to the state or register, but we would highly suggest that you do. They say trade name, because we can only pay everybody in our system. We can only pay one name in our system. So if we have an ABC daycare and you go by ABC daycare, but somebody has that trade name and they have registered with the state of Oklahoma, then we cannot name you ABC daycare in our system, and we can't pay you under that because it's already registered through the state. So if you haven't trade named yours, you can always call the filing department and they can get it. It's like $25 a year. And that way you can keep the name that you have and we don't have to pay you under somebody else. Something else that we check is proof of ownership. Again, you don't have to send anything to us unless you are new. You just notify our, if you are new, you will have to send us information, but we do need to be notified if you do change. So maybe you go from a sole proprietor to an LLC, or maybe you go from an LLC to a corporation. If you do that, we do have to be notified of this. And the reason, again, it could delay payment, it's because the system that we're using, the payment system, is the whole state uses it. So it does, like if you change from an LLC or sole proprietor and you don't tell us, so we don't get it updated in the system, it's going to stop the claim, or it's going to delay it because it's going to be like, these are not the same people, because we do have to have everything, and our system has to match exactly what it does for the state of Oklahoma. If you're a private nonprofit, just so that you are aware, and I'm not talking about a nonprofit daycare center. I'm talking like a private nonprofit that does not have a license with DHS, or and we're not talking about a school, because you already get background checked. It's for those people that kind of fall through the cracks. So those people that do not have to go through DHS to have a background check, or you're a school district, you've had background checks. It's for those private nonprofits. We really have a program a lot of times of what they're on, and they're not captured there. So we're just going to make sure that everybody is safe to be around children, and that everybody that is serving food and serving meals to kids does have that extra step of safety, because again, it's very important for the kids to be the safety aspect for the kids. So we just wanted to make you aware. We can't always do a background check at any time, but if you are coming onto the program and you are with a private nonprofit entity, that we will be checking backgrounds. If you're with an organization like a community action, now the people in the centers have had the background checks, but we will ask for some of the people, not the board, but the people like in the administration, to have a background check as well. Now the budget, so the budget does have to be in the application every year. It does need to be submitted, except if you're a school. Schools do not have to do a budget at all. It's just based on because they already fill out a national school lunch application. So it's just streamlining things for them. So if you are a school, you're the only entity that does not have to fill out a budget, but everybody else does. The budget is projected. It's projected of what you're going to be spending through the year for CACFP and just for your center in general. This is a lot of times where we see the updates that need to be done throughout the year. So you can always like make your budget higher, but once you start getting to that budget or going over the budget, that's when you need to go into the system and update that. So always project higher than what you think that you might need. So that way that's just a safeguard. So maybe you don't have to go in and update it, but it happens. I mean, we have inflation this year. And it gets hard because you think this is what you're going to spend and then you end up spending over. And that does happen. Or maybe you have a piece of equipment that like your oven went out and you need to buy a new oven, and you can charge that off to CACFP if it's a CACFP expense. If it's only used for CACFP, you can charge off the whole thing. If maybe you're at a church and the church will be using it as well, so it's 50% for the daycare and 50% or whatever the percentages might be for the center and for the church, then you can prorate that. But if it's not in your application and it's not in your budget, then you can go in and add it at any time, because it may not be something that you did budget for because you did not know that you're going to have to get a new oven. CACFP training during the month of October, it is offered very frequently, but after that, we do have it usually the first Tuesday of the month. Sometimes things change with that, but on the foremost that we do have CACFP application training throughout the year. It's usually one time during the month. It's usually the first Tuesday. So if you are new or if you are doing your application, we do offer that. Or maybe you have somebody that is new at your facility, even though you have been on the program for a while, that they can go and help at any time with the application and agreement. Now, approving the budget. So again, all expenses approved by our office will be listed in the last column. Sometimes we may require documentation to approve certain expenses, like maybe equipment, like the oven. We might ask to see an invoice. If you're traveling and spending CACFP money, we will always ask for information, just like maybe registration fee, flight information, or even if you don't know it, it's just you're giving us something to let us know why you said that you're going to be spending this much money. And even if you are not charging labor off to the CACFP, it still has to be in the budget because we do have to make sure what you're called is financially viable. So what that means is we have to see what you spend for CACFP, but we also have to see your whole budget's information. Now, if you're with a larger entity, like say a school or a military base or a hospital, we only need to really look at CAC or your child nutrition, like the whole daycare's aspect. We don't need to see like the entire financials for the hospital or for the military base. But we do have to make sure that you are what we call financially viable. So what financially viable means is that you don't need our money to operate. So like we are giving you funds for reimbursement, but you shouldn't need our money to keep your doors open. So the purpose of CACFP, a lot of people don't realize this, is you should already be serving the children. But what our money does is so you can provide better, maybe more nutritious or foods that the kids may not be exposed to. So that is the purpose of our program, is to make your meals better. So you shouldn't need our money to operate. It's just to help make the food and make some of the stuff that you do better for the program. Because there could be interruption in pay. I've been around long enough that the government has shut down. So if that happens, then we can't pay. And so you have to still be serving the meals as you are supposed to do. So just to make you aware, that's what part of the budget is, to make sure that you're financially viable. And this is something that's called VCA, that you're financially viable, capable, and accountable to be on our program. The other aspect of VCA is, again, being capable. So you have administrative capability, that the staffing is adequate, and the ability to manage operation compliance. And then you have to be accountable. You have to have oversight, the training, the record keeping, to make sure that all the expenses are appropriate for CACFP. Now, we are always going to monitor CACFP as long as you are participating in the program. So VCA is very important. It's actually, if you looked at the agreement that you had with us, the first thing says that you will be financially viable, capable, and accountable. It's always been in there. since the beginning of time. It's something that we have been focusing on more since we had an ME with USDA. And so it was something in there that we had to address and that we had to have a plan in place. And so that's why it's been taking steps of how we're going to put, and that's with everything that we do, especially with the financials. We never looked at the financials the way that we needed to. So that is the stuff that we have had plans in place of to make sure that you are following CACFP. Now, again, we mentioned what financial viability is and that we'll always be looking at VCA. But if you are SD seriously deficient, or if you're brand new coming onto the program, you have to fill out the paper document VCA, and you do have to send us documentation supporting that. So when you fill it out in the application, we don't need supporting documentation, but we do have to have supporting documentation when you fill out the paper document VCA. And again, you only have to do that if you were SD in the previous year or if you're new coming onto the program. So when we come out to look at records, one thing when we're looking at being financially viable is, so when we come out during the review, and we're not expecting you to have this on hand when we first get out there to do the review, but we do want you to know that what the information is that we do need so it can be pulled for us. So we do need something, again, that shows us of your whole organization, your whole center, if you're with the military, anything like that, your whole child nutrition aspect, maybe your whole daycare center, maybe your whole at-risk program, whatever it is, if you're part of a larger entity. But if you really are just like a daycare center, we need it for the whole center, but we need something like a year-to-date report or a profit loss. Schools, you have a revenue expenditure worksheet that you can give us, or your report that you can give us. If you use QuickBooks or you use an accountant, any documentation that you have, again, that shows us your whole financials for your organization. Now we'll take it either an annual report, maybe you're just going to give us what you have that you give to the IRS. If you you do your stuff in QuickBooks monthly, maybe you have an accountant that gives it to you quarterly. Whatever report you have, we're going to look at that. So whatever month you have the last one, give us that. We may be looking at current information as well, maybe some other stuff that we do tend to look at, but just make sure somebody knows where that is or who to go to get that information. So again, like if you have an accountant and you get a quarterly report from them, just make sure you keep it in a file someplace, or even put a copy with your CACFP stuff. That works out too. Just again, so somebody knows where it's at and we can take a look at this when we come out to do your review. Because if you are not financially viable, then you cannot participate in our program. It's one of the big things that we have, that it's an automatic, you cannot participate, or you can be SD for not being financially viable, and we'll give you time to work on it. But if you do not stay financially viable, then we can't have you participate in the program. It's one of USDA's big things. So something else, so we look at to make sure your organization as a whole is financially viable. But something else that we look at, especially during the review, is to see that you're in a nonprofit food service account. So when we come out, we're looking at your expenditure revenue report. So it shows us, you list everything that you spent for CACFP that month, and then you show us your revenue that you got that month, whether it be from reimbursement, maybe it's income from non-program foods, whatever it might be. But what we do have to have at the end of every year is what we call a nonprofit food service account, or we call it an end of the year report. So one thing is you have to be financially viable. Again, like I said, you don't need our funds to operate. But the other thing that we're looking at, that when we come out to do a review, that we're only looking at for really 1 month, is that you're in a nonprofit food service, which means all the money that we give you, you have to spend it back into the program. You cannot make a profit off of CACFP. It all has to be spent back into the program. So when you send us an end of the year report, it does have to reflect 1 year. So a lot of times, because it's new, a lot of people did it just the past 12 months, sent us something in so they can get their application approved. But what I highly suggest to you is, on your business maintenance page, you told us when your fiscal year is. So if your fiscal year is January to December, or if your fiscal year is, say, July to June, after your fiscal year, you can go ahead and fill out the information and send us your end of the year report the month after your fiscal year ends. And then that way we won't need it again when it comes time to your application. We'll already have it It's really good if we can go by your fiscal year. And I think it's a lot easier for you because a lot of times you're doing your information by fiscal year. So my biggest hint to you is if your fiscal year ends in December, I would say in January, send us your end of the year report. And we will not ask for it again when it comes time for renewal in October, because we're going to go based off of your fiscal year. Something else when you're filling out or sending us your end of the year report, and I'm going to give you some examples of what you can have as an end of the year report, is use it as a baseline for your budget. So when you're looking at, if you've been on the program before and you're seeing how much that you're spending on CACFP, add maybe 10 to 20% to that, maybe more depending on inflation, and add that to your budget. So it really is a good tool to see what you spent your money on for CACFP, add those numbers to the budget and inflate it by maybe 20%. So that does your budget for you. So it's really, really a good tool to fill out your budget. So when we talk about an end of the year report, we do have what we call an annual expenditure and reimbursement worksheet. And this form, if you do your regular expenditure reimbursement worksheet, what it is it's just taking 12 months worth of your expenditure worksheets and combining them onto one page. Now we do have another page that sponsors can use called the sponsor and site profit loss worksheet that I'll talk about later in the sponsor section. But a lot of you, most of you, if you're a very small center, you can use this. Now, again, if you use an accountant or maybe you're a school district and you code things that way, if you already have a way of telling us what you spent on CACFP, your revenues and your expenditure just for the CACFP, then you don't have to do this. This is only for those that everybody has to do the end of the year report, but this annual expenditure and reimbursement worksheet is not required for everybody if you already have a way of giving us this information. We don't want you to do the work twice, just one time. This is the most popular. I'm even going to add, I think, the name on here to say end of year report, because it's truly what it is, but we call it right now the annual expenditure reimbursement worksheet. So what you do on this worksheet is, again, you list your institution name, the year, and then the fiscal months that are going to be listed on here. And in this case, they're going to use January to December because it's this entity's fiscal year. So what they did is they took the regular expenditure reimbursement worksheet that they fill out every month, and they took January from 2022, or let's see, yeah, well, let's just say 2023. Let's say 2022 because we're going into 2023. So we've already done 2022. So they're just, they just fill all the information out. This came straight from their expenditure worksheet. These match. Now, this is in the interactive worksheets at the very bottom. So if you go to worksheets in the resource library, this is out there. Now, I will let you know that there is a tab. It's in Excel, so this will do all the math for you. At the bottom, there is a tab because we have some people that they do have more expenditures more than this, and there's 3 or 4 blanks, so you can write in what the expenditure might be. And then some people do get income to the program. So maybe you have adult meals that you charge for. That will also be listed. Everything on that tab will carry over to this bottom one. We just have to make sure that the money that we're giving you in reimbursement, so on number 12, it says reimbursement. And then number 11, it says that this is the total expenditures for the year. We have to make sure that you're spending all of your money that we give you back into CACFP. Now, some of you, and see, the thing is when we come out, we only look at 1 month. So we really need to be looking at 12 months because 1 month maybe you spent more and 1 month maybe you didn't, and it all washes out in the end. Now maybe you have a little bit of a profit where you did have a little bit more funds than what we gave you than what you expended. But what I can tell you is you are allowed to move over just a little bit. It's called a 3-month operating balance. So you are allowed to carry over just a little bit. But if it is too much and we say, no, it's still too much, there's a couple things you can do. We'll ask for a spend down plan. Like, how are you going to spend the money that we gave you? Maybe you're $10,000 over your 3-month operating. And if you are, then we're gonna be like, okay, you need to spend this $10,000. How are you going to do it? And then if you're like, I don't know, then you can just give us a check back. So don't freak out if you are over. And we are going to look at this when we come out to do a review. We will look into this a little bit further, but you do need to know that you can't make a profit on the government. You have to be what we call in a nonprofit status. So just so you are aware, and if you are, don't freak out. We'll walk you through the steps. Another thing is if you are a for-profit organization, you are for-profit, you can only have, if you expend more than $750 in total federal funds, then we were going to do what we call a program specific audit. We have contracted out with DWG. So when we're talking about all funds, we're talking about your cash in lieu, your title funds, your CACFP funds. Any of your contracting funds, your DHS subsidy is not included in this. So it is all the funds that you receive federally. If you do, again, go over that $750,000, then we do what we call, again, a program specific audit. We come out and audit every 2 to 3 years. We do a review, and those years that we are not coming out to do a review, that is when this DWG is going to come out and look at your financials. So you're aware, we don't have very many people that do this or need this, but just so you are aware. Another thing that we have to have is an organizational chart. And many of you have sent this in either at the beginning of doing your application or whenever you did your VCA, we had to have an organizational chart. Now it is required that we have one on every institution. You don't have to send this in every year. We only need it if you make updates. We only have to have the titles. We don't have to have the name of the person in that title. And if you already have one, like our organization has one already that we did not have to create. We've always had one up to date. It has names on there. So just feel free to send that in. We're not going to be looking at the name. We're really looking at the job titles, but we don't want you to create more work for you. But this has to be for your whole organization, not just CACFP. We have to know the hierarchy. This is an example right here of a for-profit daycare. We just need the hierarchy. We do have one in the manual and I think it's also in worksheets and in the financial section that we have one for nonprofits, where we'll have the board. We'll just put board number 1, board number 2. We also have examples in our manual, so you can go there as well to reference that. But again, we don't need this every year, only if there are changes to your organization. Maybe you added a position, maybe you eliminated a position, then that's the only time that we will need the organizational chart to be updated. We also do, again, this is coming from state auditors. Last year was our first year to do this. We have to do what we call claim validation. So what it is we have to determine if your claims are high risk. Again, this is all because of state auditors. We analyze the data. We do it 3 times per year. And we're looking for information like maybe, did you claim meals every day of the month? Are you claiming all meal types, claiming the same number of meals for every meal? Are you claiming uncommon meal types? Like say if you're at risk, are you maybe doing breakfast or lunch instead of supper? Or maybe you had a lot of revisions. These are some things that could throw you into maybe being a high risk claim. So if you get selected, if we notice that your risk is high risk, it does not mean that you're doing anything wrong. It just means it was flagged by the criteria that we're looking at. If you've been selected, you will be contacted by our office. I believe it's going to be Cassie Riddell that's doing mostly all the validations. It's going to be looking at a lot of the paperwork that we would look at during a regular review. So once you are contacted, you have 3 business days to give us the information that we need. We will not be coming out to your center. This is done in our office. So we do this 3 times per year. So just so you're aware, if you are reviewed, we try not to, as our best as we possibly can, you will not get a claim validation in the same year, hopefully, that you're reviewed. Now, sometimes we can't really avoid it, but if you are reviewed, we try not to do a claim validation in the same year. So it should be people outside of that. So for 2023 application approval, if you're first starting to do your application or finishing it up, just a reminder, we need your organizational chart, your end of the year report, a bell schedule, and then a VCA Word form if you were new or SD last year. So next year, when we talk about 2024, we really are going to need, again, the end of the year report, a bell schedule, and then the VCA. So the only thing that will be taken off this list is the organizational chart. Unless you had any changes to that, then we will not be asking for that again.